Afternoon, everybody. I've got the Lamborghini. I've got one. Thanks to your generous donations yesterday, I have a Lamborghini. Thank you very much. How are we all doing? Afternoon, Ian, Monkey, Evil, Champagne, Kennelly, Alex, Mark, Fletch, Virginia, Evans. Afternoon. Discord is now down there, look. Coming. So whoever said this morning we need the Discord channel, it's there. It's also in the description of the video now. Right. So this morning, let's have a look at news. How many we've got? Oh, I've moved the counter. It's in a different place. That's throwing me. Still see it. Right. So this morning we had the GDP for the Swiss, which was bullish. So we've had a bit of an upward move on the Swiss franc today. There's a few ADRs today. The vast majority of it is, well, it's all yen based actually. But we have had a move on the Swissy as well, although that is slightly undoing itself. But Swissy's had a decent run. So that's helped that news. Although the Swissy's kind of having a bit of a run down now by the looks of things. So yeah, in the last hour, big push up. But that's the news this morning. Afternoon, everybody else. Nice Lambo. I know, it's good, isn't it? It's a good one as well. It's got a spoiler and everything. So the other thing we've had this morning, which came out after I finished the live stream because we're waiting for all the states to declare, was the German preliminary CPI figure, which inflation has moved up, but not as much as they were expecting it to. So we'll see what the French CPI numbers come out at. The Spanish CPI is stable. That doesn't really do an awful lot anyway, but it's the French and the German which makes up the vast majority of the Eurozone. So that is an indication that inflation isn't quite bouncing as high as they thought it was going to, and it's slightly less, but it's very much slightly. This is only monthly figures as well. The market, or rather the banks and institutions, pay attention to quarterly much more than monthly, but monthly is an indication of where we're going. So yeah. So that is ever so slightly bullish euro. The ECB came out. I posted it in the Discord channel today. The ECB came out and said that they're definitely not looking at a rate reduction before June. A serious ECB rate cut decision is unlikely before June. So falling in line very much with the US as we expected, as everybody will. The only people that have a potential to drop interest rates before the Fed, I think, is the Swiss. So their inflation figure is below 2%. So they're not in deflation yet, but they need to be careful that they don't get this figure dropping too fast. If it goes negative, that's bad. So it is coming down at a fair rate as well. So there is a possibility that the Swissy could move before the Fed. Everybody else, I very much doubt anybody will go before. So the euro is 2.8. US is 3.1. The US will be less interested in the inflation dropping to 2% before they do the rise because their GDP is great, which will help anyway. But the euro, they don't have any, virtually in recession. So, yeah, so basically the upshot of this morning was not a lot, as usual. So there's no other news this morning apart from that CPI number. We are on now for the CAD GDP figure and the unemployment claims for the US. Unemployment claims tend to move the market quite a lot. Not as much as the unemployment rate, but we do get an awful lot of movement off of it. So we'll see where we go there. But that's coming in 10 minutes. Afternoon, Gregors. So this morning's ORBs, I cocked up this morning. I made a boo-boo with the EA yesterday. So when you put the opening range breakout or the stock index hedge EA on the chart, it does a load of calculations at the open. If you are in a trade and you shut your terminal down and then reopen your terminal, it reinitializes all these calculations, which means it will not operate basically anymore. So you can't shut your terminal down because it's in an active trade. So I completely forgot I restarted my terminal yesterday because I needed to switch accounts. I got out of my shorts, my longs on this double top, waiting for the aggressive to trigger, and it didn't. So I left it running, and I completely forgot about it, and I forgot the shorts were on. When I looked at the chart yesterday, I was kind of zoomed in, and I didn't even see the short positions on. It's my fault. I wasn't paying any attention. So this morning, I had to take a stop on these. But if you'd have taken the pre-market range today, you'd have got a 5R. If you'd have taken the 5-minute ORB today, you'd have got a 5R. So I didn't take it. This is summing up my month, basically. So yeah, it was a lovely break on the DAX today. The FTSE, however, immediately hedged me and has gone absolutely nowhere all day. We've just about managed to get 1R to the upside and just about managed to get 1R to the downside. It's just this. At the moment, we are just getting nothing. It's awful. So we'll see what happens with the US this afternoon. The US yesterday was pretty good. I had 2 out of 3 on the US yesterday on the hedges. So that was nice, but market's really flat. We'll see where we go. Got 8 minutes to the news. So I'll just quickly run through the P&Ls. Obviously, the yen, we've had a lot of move, as you can see from ADR. There's massive movement on the yen overnight because the Japanese came out last night and said, I forgot, if you weren't here this morning, I covered all this morning, but I will quickly cover it again now. We're basically saying that we are going to change our interest rates. We're not sure if it's going to be March or April, which is more than they said before, which was when they said we're going to change the interest rates back up to 0 at some point. Radio silence for weeks. So Takata's came out last night and said we can't make up our mind between March or April, meaning we are changing the rates. That's how I'm reading it, and that seems to be how the market is reading it. However, you could read that as I'm undecided on monetary policy decision for ending negative interest rates in March or April, i.e. I'm not sure whether or not I'm going to do it. So that could be read in either way, but the market has interpreted that as brilliant. The interest rates are going up, therefore it's bullish for the yen. So we've had this massive move on the yen, which kind of started to kick in yesterday, and obviously today has kicked in further. So ADRs across the board. So banked 2.39% today on ADR reverse on H1M5. I banked 2% yesterday. Everything is going in the right direction. There's nothing on the P&L that is of any worry at all now, apart from US dollar yen, which I've put one more aggressive drawdown control position on today. Here. So basically, I was looking for a quick pullback into previous support and a bounce out of there. So I entered a short as we bounced. It's now pushed up again, and we're sitting around the support. So I'm hoping that we're going to hold at support after the break, and we're not going to come and retest this propulsion. If we do retest the propulsion, I'm going to have to exit that and take a loss, which will be roughly $500. So that'll be basically a 1% loss, which is not the end of the world. It's going to knock me down to 7.5% on the month. But so yeah, hoping that we get a continuation rally on this US. So everything is now nicely in proportion, with exception of US dollar yen. However, the US dollar yen, I'm literally looking for a 2 ADR move. And if today's anything to go by, and the market rallies off the back of that, or the Bank of Japan comes out and says anything more overnight, we could be down there tomorrow. So it would be lovely to be able to get out of this little finally, after being in it for 2 months. That's position trading. yeah, 8.5% banked. ADR reversals, 2.27 banked today, 2.42 banked yesterday. The vast majority of it yen based. As you can see from the P&L, the Swiss franc is the main problem here, not the yen. Managed to get out of some Swissy. What did I get out of on the Swiss? I'm sure I got out of some Swiss today. No, I didn't. It was yen. Euro yen. So got out the euro yen today, half of it, and I'm holding the second half. Euro New Zealand, I also exited. That's my live. Looking at the wrong thing. I'm sure I got out some Swiss. It was Swiss yen. Swiss yen. That was because it went long. Oh, God. This is going to be one of those sessions today. Pound yen I got out of, and euro yen. So those are the two banks, the main banks. Everything else basically is all within normal ranges. The euro New Zealand, the pound Swiss, and the euro Swiss are all getting a little bit heavy. So I'll be keeping an eye on those. But apart from that, 15.5% banked, 13 DD. And hedging banked 1.35 today, 5.4 banked yesterday, up 36% on the month. Everything there is absolutely fine. Nothing to worry about. Just waiting for stuff. Afternoon, David. Gregors, said that already. So yeah, all going good. We've got 3 minutes to go. So the news today, we've got the Canadian, obviously the GDP figures, 2 minutes to go, and the unemployment claims for the US. So the US dollar so far today, not really had an awful lot of movement. US dollar CAD, US dollar Swiss has pushed up. We've had that weakness in the Swiss franc just creep in. And US dollar yen is grinding back at the moment. But even if the US dollar does get some decent news, I'd be surprised if it gets too far, but we'll wait and see. So the Canadian dollar at the minute, it's a bit difficult to find something we can read the CAD off because we've had movement everywhere today. Yeah, probably pound CAD and euro CAD just show there's a little bit of strength coming into the Canadian dollar, but not a lot. So I forgot to say, hit the like, everybody. Hit the like button. Hit the thumb. Don't accidentally hit the dollar sign. Hit the thumb. I said that this morning and somebody else tipped me another €5, which was very, very nice of Steve to do that. So yeah, we'll see where we go with these news. We've got 1 minute to go. If anybody's got any pairs I want to look at, let me know. I'm going to quickly run through the RSIs. There isn't an awful lot to look at on RSIs. ADRs, there's not really a lot to look at on ADRs. It's all yen. So if you want to mean revert these yen moves, feel free. I decided not to. So there is a chance that we will pull back into propulsion on these, and there's a nice mean reversion opportunity on them. But as you can see, I closed out. The EA got me into longs this morning on most of the yens, and I just closed them all out either in a very small loss or in a break even. I just don't want to try it personally, but I have no idea if it's going to mean revert or not. But I think there's a good opportunity for these yens just to flag and break. We've been waiting for this move for such a long time. I think the market might jump on board, but we'll see. So, right, let's look at what the CAD does. News is just coming out. Look at the spread. Jesus. 12-point spread. 12-pip spread. Oh, that's a massive spread. Look at the size of that thing. 17 pip spread. They do like a bit of news. Let's watch US dollar CAD. Terminal freeze. Right, so US dollar down. So looks like the numbers are inflated unemployment claims. So that's negative US. It's negative US. CAD GDP figures don't look like they're doing anything. So negative US GDP as forecast. Oh, sorry, no, I haven't. That's not GDP. That's PCE. GDP for the CAD. 1% up, positive CAD. So that's not far off the forecast. The forecast was 0.8. That's a different. They're reporting slightly differently on the. Yeah, they're reporting the quarterly as well. So month on month it's down, but quarterly it's up. So it's a mixed bag for the Canadians. But negative US, but that is a very, 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 very small miss. Look, it's 209, 215 is the actual, so it's only 6,000. In the grand scheme of things, that's less than the increase that was forecast. So not really a lot of... I wouldn't expect a massive movement off of this today, unfortunately. But it is slightly bearish US. That's what I was hoping to see. Nice drop on the US dollar yen. Oh, okay. Right. So nothing much to report there, unfortunately. The numbers aren't very far out from forecasts. Look at these brokers. Spreading the crap out of it. Anybody sitting down on the 1 minute charts now is just getting absolutely destroyed. Look at them hitting the stops, look. You watch the ask, look, jumping up and down. Yeah? Anybody hitting the sell button now, they're just grabbing the stops. All the news traders just getting destroyed. This is why you don't trade news. It's fun watching them. You can just see the money pouring in the brokers. Look, a little bit more, a little bit more, a little bit more, a little bit more. This is all fully automated, this, by the way. Broker software basically has automated systems in. So when there's new orders placed into the market, they know how much money is sitting at each level. And so the difference between spreading the market to there, and there will have different monetary amounts attached to it. Yeah. So all they've got to do is press a button to spread it to that level, and they just take all that money and pop it in their bank. That's why your spread widens around news. We return to normal after we've taken everybody's cash. Oh, to be a broker. Good job. Right, we're tracing a little bit on the US dollar. So it's a bit of a knee-jerk reaction. There's no real bull or bear advantage in either of those news events today. Canadian dollar, GDP might weaken it a little bit, but GDP is nowhere near as important as inflation and interest rates at the moment, so not a lot. Right, let's whiz through the ADRs. So ADRs today, this terminal seems to have totally frozen on me. Let me just refresh the server. Right, so ADRs today, all yens basically. So CAD yen, ADR hit to the downside, yen massively strong. So you've had reversal alerts on this morning. You had a reversal alert in there, then it's pushed down, put in a second reversal alert there. So your entry 1 and entry 2 today would have been there. So you're in profit on both if you took them. I wouldn't want to go much more than back up to previous support from yesterday, which is going to potentially turn into resistance. So if market structure is going to hold, we're going to retest that level before we put a second leg in. So if it does that, obviously there's a very good chance, I think, today that we might just go into an accumulation and break tomorrow, or flag and then break from there. So you will get a pullback potentially on these, but I wouldn't get greedy with them if you're going to take them. So there's CAD yen, Swiss yen's obviously hit ADR as well. Reversal alert. Again, you had a reversal alert there, which is where the EA got me in. I decided to exit that. You had another reversal alert there. So again, very close to each other because we got that uneven W pattern today. That's putting in a potential head and shoulders break. But again, you look at it on the hourly chart, don't get any more greedy than, I mean, this accumulation that we've had on this yen, absolutely anywhere in here, you could find sell orders, which you just will not get through. So, which is why I'm thinking potentially that and then a drop today or tomorrow rather than a pullback, but they may pull back. If they do pull back, just don't, if you get into like 0.25% of, if you get into any decent profit that is getting close to bankable, break even, stop it or take it. It's just, I just don't think that's going to get any legs today. Euro yen. So we've had a decent pullback on this one. So this one, you actually already have had the exit today. So the reversal alert was down there. So your first reversal alert was there. As you can see, I took it off in a loss, but that was the reversal alert. You've had that much out of it, which is nothing. So it managed to get you 27, which is about a quarter, just over a quarter of an ADR, not even a third of not even half an ADR. So about a third of an ADR maybe was the profit potential. And it's coming back down again. So there was an entry and an exit on that one, but not for me. Pound yen. Again, you can see EA got me in. I decided to exit. Didn't want it. We haven't gone anywhere. I covered all these this morning in the live room, but and US dollar yen, obviously, I'm short. EA got me in there, so I got out. So just to let you know on the EA what I've done, after all these trades got taken and I realized I was trying to hedge into the positions, I just went into the EA, and all I've done in all these yen pairs, you can see I'm on New Zealand dollar yen here, I've just opened up the settings and I've set the EA to trade short signals only. So I do not want to be going long. I just want to be going short. So I'm just short only. So if we get an ADR hit to the upside on New Zealand dollar yen, I'm absolutely fine jumping in short into a new position. But I do not want to get in any H1, M5 mean reversion trades long or any ADR reversals to the downside to try and go long, because I think this is going to power up the yen. So I'm short only yen. New Zealand dollar yen, obviously that one as well was a hit today, but all we've done is given the reversal alert. So that is the first one today. Sorry, no, there was a reversal alert there, and then we just literally tapped the wick, and so the next one's there. So that is basically the same reversal. Yeah. So as you can see, going nowhere. I just think every time they try and rally this, these bears are just going to drive it today. So I'd be surprised if we do get a pullback on it, but we'll see. It's the yen. The Bank of Japan could easily come out tomorrow and say, you know what we said yesterday? Maybe not so sure now. They've done it many times. So it could be back up where we started tomorrow. But for the moment, I'm erring on the side of caution and assuming this time they're actually going to do what they say. You know what assume makes, don't you? An arse of you and me. If you didn't know that, spell it out. Arse of you and me. That's what assume does. Makes an arse of you and me. Never assume anything. So Euro odd, it's coming down nicely off the highs. So that was an ADR hit today. That was actually an ADR hit to the downside. We hit ADR, we've pushed up, we've hit ADR to the upside, and now we're coming down again. So you would have taken an ADR there, you could have taken an ADR there. You won both. Well done. The other ones we've had are Aussie, New Zealand. So that's the only one today, apart from the Euro odd, that is not related to the yen. We looked at this one this morning. You did get a reversal on it there, but it didn't go anywhere. We're stuck. So, but I literally hate, I said this morning in the live room, I hate these ones where it just taps it. I want it to be extended. I want it to be really stretched. I don't like getting in that 100 ADR. Right, so there's your ADRs. So yeah, all good there at the moment. Just waiting for stuff to move. Let me just make sure I've got TPs set on these. That Aussie dollar Swiss, I was not expecting that actually to get a rally today. So I'm just going to put a break even on that Aussie dollar Swiss. TP is tricky on that. It's not a lot of money, but I'm going to assume we're going to double top today, and we're not actually going to. I don't think. I suppose it could, couldn't it? Okay, I'm just going to. So basically, this one. I'm not convinced on Swiss franc weakness. We've just had a nice rally on the Swissy, and I think there's potential for it to run again now that the Euro's confirmed a June date for interest rate change. So if it does run, I'm going to target propulsion at 125 ADR, which is just shy of the previous day's low, which is here. So it's basically going to potentially hit a hurdle there. If, as I suspect, we are in bearish market structure, doesn't seem like long enough of a pullback, but if it is just a flag break short, I will get out with a break even, and I won't scale into this one because I think the Swiss has got a chance to power up as well. So, so Aussies on the Swiss, I'm in. Just seeing if there's anything else bankable. Euro odd. Euro yen. So yeah, holding everything else. So yeah, that's the ADRs. RSIs, I'll just quickly catch up on chat before I do those. Afternoon, Mumo. David, I hope you're joking. I thought February only had 28 days. Now, some people may ask that question seriously. So I'm not going to answer it. Afternoon, Amy. Afternoon, Champagne Pappy. Nice. Yes, you bought me this. Thank you, Champagne. I bought this with my... I didn't actually buy it. I nicked it off my son. But we were talking about buying a Lamborghini, so I thought, get one. Yeah. Is it normal for the drawdown to be lower in back testing than on a live account? No. Well, no, your drawdown will be what your drawdown is. Whatever happens in a back test is what happened. Whatever happens live is what happens. Whatever happened there has got nothing to do with that at all, is it? So if this went into 16% of drawdown in the last year, that's got absolutely nothing to do with this year at all. It's not going to go into 16% of drawdown this year because it went into 16% of drawdown last year. It's going to go into whatever it goes into, depending on what happens in the world. If we have another pandemic, it's all going to go completely wrong. So yeah, it's nothing to do with... don't really understand the question, to be honest. It is what it is. What you've tested and what you've achieved in testing is what was achieved in testing. Or can I adjust this to the real conditions with Tick Data Suite? I have already activated spreads and slippage. I don't know what I don't quite know what you're saying. Backtest is a backtest. It's showing you historical information and whatever setting. So if you got an EA and you basically set it up for whatever you want to set it up for, it'll trade that and tell you what you would have got. That is literally all it is. It's just here you go. If you adjust the spread from 2 to 5, you'll get a different result. If you adjust the spread from 5 to 10, you'll get a different result. If you use a current spread, you'll get another different result. If all those results are positive, it's robust. If none of them work, chuck it, start again. I don't know. I tested my last week with EA and checked the drawdown. I don't know. Test is a test. It just shows you what happened with the data that you're using. If you want to see what your broker's data would have given you, don't forget your broker's data. When you're backtesting with your broker's data, you're backtesting 1 minute charts. Yeah, they do not have tick data. Yeah. They do, but it's crap. This is why when you do a backtest with your broker's data, it gives you a accuracy score of 15 or something stupid, because it's missing a load of information. Your broker basically needs to download enough information to draw a candlestick on your chart on the 1 minute time frame. What happened in that 1 minute, it doesn't care. Its job is to show you what the candlestick did. The open, high, low, and close is stored, not every tick. So you will not get the same result. Let's say, for example, a candlestick went like that. You got an open, a high, there's your low, sorry, open, high, low, close. Yeah, you know what I mean. That is what it will get painted on the chart. If an EA runs on tick, it will be doing calculations in here, and it might have gone, "Oh, there's your profit. I'm going to close your trades." But in the back test, won't do the same thing. Again, which is why I say everything. If you want a strategy that works in the real world, you never test on anything but an hourly chart. If you've got a strategy that runs on 5 minutes and doesn't use any higher time frame confluence, i.e., multi-time frame analysis, H1, M5, mean reversion, you're not going to get accurate results. Which is why everybody trades H1 or above. ADR reversals is kind of the exception to the rule, but it doesn't matter whether an ADR hit. Doesn't matter whether your entry was there, or there, because we're just looking for something to come down or go up. We're trading a day's worth of range. We enter on the 5 minute time frame, but we're trading an entire day's worth of movement. Where everybody goes wrong is they try and trade on the 5 minute chart using 5 minute indicators. Never going to work. But backtesting is very hit and miss. It will give you rough information, that's all, at best. In the backtest, it was lower than in real conditions. I don't know. Maybe your data's crap. Maybe your settings were different. I don't know. This is why I tell everybody. I say it until I'm blue in the face. I say it all the time. No one listens. No one. I'm not saying you're not listening. I'm just saying nobody believes that there is not a strategy out there that will work. It's just nobody believes it. Everyone is looking and hunting for the perfect set file for every EA. They're building EAs to create the perfect set, the perfect trading conditions. There isn't one day on the earth ever in your charts that is the same. None of these days have the same price action. And the price action that occurred here on that day has never been repeated in the past, and it will never be repeated again in the future. Everything you do in a backtest is just random results generated by the settings that you've entered into an EA using a piece of software that's using data that isn't accurate. Yeah. That is what you get in backtesting. It won't help you in any shape or form looking for a profit or a confluence or anything. It just isn't going to work. What backtesting is used for is, I see this indicator called the RSI here. So if I was to get into a short trade somewhere between 70 to 90, yeah, and go for roughly half of an average daily range's worth of movement, or maybe a quarter or 3/4, would all of those instances have made me money? Yes. Brilliant. So basically, if it's somewhere around there and I hit the button somewhere around there with some kind of indicator and target somewhere around there, it'll make money. It's not that level, that level, that level, that level, that level. It's all of them. They all have to make money. This is robustness testing. This is what EAs and back testing should be focused on. This is the bit everybody misses. They're looking for what's the settings. There isn't any. It's like saying World War II happened. This German bloke went mental and started killing everybody and started a world war. What's going to happen in the next year with Russia? You don't know. So how can you plan for it? And you can't use the information from World War II to predict what's going to happen in World War III. Not going to happen. Can't predict anything from this information apart from, does it matter? That's the question you should be asking yourself with a backtest. Does it matter if I use the 70, 75, 80 or 85 to take a short position with a 2 ADR stop loss? Will I be able to achieve a quarter or a half of an ADR of movement in that direction? If all instances are true, strategy. Which is the right one? Don't know. Is it going to get to 70, 75, 80 or 85 next? Don't know. That's it. That's literally all it's going to give you. Why you get a different backtest for live data? It's the only thing it can be, isn't it? The only thing that can give you a result in your live account that is different if you backtest the same period of time is that the information that the backtest is using is different to the information that you were trading live. Ticks, spread, swaps, commissions, that sort of stuff. There's nothing else it can be. It has to be that information. Again, people backtest. My backtest results are all up there. They're my backtest results with my data, with the settings that I used, and that's what the printouts gave me. People use the same thing and go, I get different results. Well, your data's different. Well, how can I possibly have any confidence in anything? You can't. You want to be a trader? Bloody hard work. It's completely random. You've no idea what's going to work. Get in the market, wait for it to move and see what happens. Have a look and see if it's roughly where it should be. If it is, good job. My variance is 60 to 70%. If I run a system parameter permutation test in a back test where I test 1,000 different variations, if 600 to 700 of those produce alpha, i.e. a positive result, I'm in. If 30% of them produce a positive result and 70% of them lose, throw it away and start something else. Yeah, that's the best I can hope for. Roughly 60%, 70% of the information I get is going to be accurate. Think of a bell curve. If anybody's a scientist, you know what a bell curve is? Yeah, when you're back testing, bad bell curve, right? This is 100% of your results. Okay. When you run 1,000 tests, so say that's 1,000 tests, you're going to have outliers. You're going to have some of your results which are going to produce results which are like, holy crap, this is 300% return. This thing is going to make me a millionaire. You're going to have outliers down here which are, this thing blew the account every time. Utterly useless, doesn't work at all. And you're going to have an area in the middle of that bell curve, which is what is probably going to happen the vast majority of the time. That is what you want. Your 60 to 70% of your results show that you would have made money if you'd have taken any level or done any target or used any trailing stop. The vast majority of them would have actually given you a profit. That's the best you can hope for with anything. That was a bit rude, didn't it? Now I've realized what I've drawn. But anyway, so yeah. I've never ever backtested my results. So I've never done that, but I'm pretty sure if I backtested my results, if I got the account here, look, of what I've done this month, and I backtested everything up until today's date, I'm pretty sure it will give me a different result. I've no idea, but I know it would with mine because obviously I intervene. I shut trades out sometimes and I do drawdown control. But if you had a strategy which was rigid that had never been touched, you're probably going to get different results, aren't you? So I don't know. I don't really have an answer for that one. That's what I suspect anyway. Aussie yen is extended on the not ADRs, RSIs. So big move down. I have got a long on this. So the EA took a long. I didn't spot this yesterday. This is my fault. So as you can see, I got out of the shorts on the Aussie yen yesterday. There. I didn't realize before I got out the shorts that it had actually taken a long. So I've had to scale in a second position on that. And I'm looking basically to get out. I'm just going to move TPs. I'm looking to get out just at a break even on it. I'm not looking to profit on this. I do not want to go long on the yen at the moment, personally. So if I can get another hourly candle up, I'm going to scrap that. But that is extended to the downside and embedded. But we've been waiting for it to get extended to the downside since the beginning of the month. So that was the last entry I had long. And then we got the short entry there. We've been waiting for a move since there. And this is the first one we've had. So they're undoing this leg. So what I'm expecting is potentially that or just a flag break short. And a similar sort of grind on the way down, but we will see. We will see what happens. But so Aussie yen is extended to the downside. New Zealand dollar yen and Aussie yen, very much the same pair. Same thing. I took a long, got out of the long. I got out of all the shorts on this one yesterday. So there was the exit today on the last part of that. And obviously all the other exits were yesterday. So out of that one, the only other extension you've got is New Zealand dollar, US dollar on the hourly. Which was yesterday. So first entry taken on that one yesterday. There. My TP is here, just shy of the support from the previous day. So I'm just looking for a quick move up into there. I suspect, I don't know, I really don't know what's going to go on with this US dollar. I assume that the US dollar is going to do something along the lines of what we've had for this year, basically. I suspect it's going to carry on doing something along these lines until June, because there's absolutely no reason for anybody to buy or sell the US dollar or any currency until June, until we know when the interest rate change is happening. And that can also be put back. We've put it back twice already. Why can't we put it back another 2 times and do it in December? So at the minute, as with all currencies, you could pretty much trade anything in either direction. And if it drops, fine, we'll take a support bounce and get out. If it pushes up, I'm out anyway. If it drops further than that, we'll be looking for other areas of support further down. But we are expanding at the moment on this. So there's a good chance we will pull down and then push back up again. But we'll see what happens. But I'm long on that New Zealand US from yesterday. That was the 75 or the 25 extension, 20 extension to the downside. So nice bounce going on at the moment. Other than that, you've got H4 extensions. Most of them are yen-based. So Aussie dollar yen extended on the 4-hour. Again, big extension. We don't often get down to these sorts of levels. When you do, you tend to get a lovely big bounce. However, this is a slightly different situation in that none of these bounces were to do with potential interest rate changes on the yen. Again, we need to wait and see. Just because this has done a move here, this is a typical profit take move. Look. You know, it's down to the Japanese and what they say, basically, but it could well continue back up again. We'll wait and see what happens. RSIs are just updated. So Euro CAD is also extended on the 4-hour to the upside. That one's already played out. You've missed it. 5-minute reversal that's just gone in this morning up here. Probably be out of that now, to be honest. You've had 3/4 of an ADR out of it already. So Euro CAD, that one's already played out off the 4-hour. Euro New Zealand is also extended on the 4-hour. I'm in that from the H1M5 mean reversion. I've got multiple positions on that already, so I'm hoping that one will come down a little bit more. Lovely double top bounce we got yesterday. we've just rejected those highs again. So this may well be a multi-day M pattern going in. If you look at it on the hourly, it's a little clearer. Just taking out those highs. We're looking for a break of that low. And then push back down. You can see my target is there for the shorts. So just coming down to retest that previous day's high and 50% of that initial move. Euro New Zealand, we've got pound CAD also extended on the 4 hours. Again, that one's already played out. You've missed it. The 5-minute reversal, that was this morning. There. So that was a 4-hour RSI extension. Nice big extension. And pound New Zealand. Again, that one's coming down nicely at the moment. H1M5 entry for me on this one. So I've just looked at that, haven't I? Is that not exactly the same as the Euro New Zealand? Yeah. This is the thing with the pound New Zealand and the Euro New Zealand. They move, the pound and the euro move together. So a lot of the time. And obviously you can see the similarities in the pound New Zealand and the Euro New Zealand chart. The correlation is very, very high. So this is kind of a duplicate position. So let's take one of those off. I don't really want to go into drawdown on it twice. I'll give it the benefit of the doubt. So yeah, that's the extension there. And we've got New Zealand dollar Swiss also extended off the back of the Swiss franc move. And obviously the New Zealand move that we had yesterday. So that's all starting to mean revert. Got 2 positions on that one, looking for a mean reversion back up to retest. I might move that TP down now into the propulsion gap there. So just going to look for a retest of the propulsion gap. So 1 ADR move to the upside. New Zealand yen we've looked at already, massively extended on the 4-hour as well as on the hourly. That's bouncing nicely off of the weekly support. And New Zealand US extended. That's coming out of extension though. So a nice W pattern going in there as well. Look, potentially. Looking for a push back up into the propulsion gap. There we go. So that's all your RSIs as well. Pound odd is coming down nicely at the minute. US. It's not a lot of money at all. Take it if it gets there. And Aussie Swiss. Already got that targeted. Pound yen coming down again. So nearly at break even on that. Pound yen. I need to put targets on this. My targets on this are all the way down here because I was expecting an intervention move, and obviously we're not going to get that intervention move now. So, well, at the moment we're not going to get that intervention move. Things can change. So, just going to target this propulsion gap. In fact, I might just go for the lows actually. Blimey. Where's that other position? It's miles away, look. Been doing drawdown control. So obviously I've got rid of a load of the positions. All these positions. So that was the initial position taken here. Sorry, that was the initial position taken there. So I've done drawdown control on that one. I've taken that one off, that one off, that one off, all with drawdown control. So I've left one of them on, but that one is obviously a little bit orphaned, miles away. Look how many ADR we out. That's ridiculous. 640. So that's about 12 ADR away, that trade. If I can get this top position up to a decent amount, I'm just going to cancel those two off together, get rid of it. There we go. That's everything covered, I think, today. Afternoon, Crom is met. Brian, afternoon. Payday today. Yeah, not too bad today and yesterday. Both paydays. Finally, waiting for a payday. We haven't had a payday. It feels like I haven't had a payday this month. As you can see, look, 4.68% this week. I've done 8.5% this month. Half of all profit on this strategy this month has been done this week. It's been like pulling teeth. Whereas we've done 5% out of 15%. So a third of the profit's been done this week. We had a flat week where we didn't bank anything. 7% out of 35 on hedging. Swiss yen's in profit. I'm going to bank that. Oh, I'm on it. Yeah, this is... I'm just going to bank this Swiss yen shorts. I've got a long on this. Because it's hedging, I don't really mind too much. Because obviously, if this does continue down, fine. When we get a reversal alert, next reversal alert short, I'm going to get another short on anyway. So I'm not going to get another entry on this. I think I'm going to find it quite difficult to get out of that one, to be honest. But you know what? I'm going to shut it. It's only $67, so I'm just going to shut that Swiss yen long. The entire profit on the whole position was $100. So that's 1%. Well, it's not 1%. It's 0.75%. So I'm closing the longs out and the shorts all together because I still think this is coming down. But there's not a lot I can do with the others that have got longs on. Just need to manage those individually. Hypothetically speaking, if you were to trade hedging on M5, hypothetically in brackets again, smiley face, would an order distance of 1 hour instead of half an hour be preferable to minimize drawdown? Yeah. Mumo, you know what I'm going to say, don't you? Put it in the back tester. Answer your question. The problem with M5 hedging is if you leave it an ADR, you're going to get so many reversal alerts on 5-minute time frame. So let's say, for example, this was a hedge. You went short there, and this is about to give you a reversal alert. It's not actually, it's pushing down again, but let's say it was pushing up. It's going to give you a reversal alert there. So you've got an entry there and an entry there hedged. To get into 1 ADR from where you are now with that hedge, you've got to be looking at up here somewhere. And if you look at what price action is doing the vast majority of the time, don't forget 60% of the time, it spends within average daily range, which means if you're spacing your trades an ADR apart, the vast majority of the time, 60% of the time, you won't be able to get a second entry on. So you're going to require the market to move an ADR, either put in an ADR hit or put in 2 days of rallying before you get a second position on. So I don't trade the 5-minute set file. I set that up because it is a good strategy, but it's very high risk. And I haven't actually tested it 1 ADR apart. So test it, see what the difference is between half an ADR and 1 ADR. But yes, it will minimize your drawdown. If you're going to spread the positions out further, I would say you need to reduce the target as well. But don't know. Where can I get the gap indicator? Yeah, MQL. It's on the website. There's a link it's the support resistance propulsion indicator. It's this one. So on here, so I've got the support resistance propulsion, ADR reversal, and market reversal alerts. Those are my three main indicators. So ADR obviously draws the ADR extensions, reversal alert, reversal alerts, and the other indicator, support resistance propulsion, draws that, the profit, the timer, your weekly supports, your monthly supports, and your propulsion gaps. Yep. So that indicator does everything else. It's like the utility indicator, if you like. It draws the daily highs and lows, all that sort of stuff. There are free indicators out there that do gaps, but none of them do what I wanted to do in the way that I wanted to do it. So I built mine. But there are others out there you can find if you Google, but I just like the way that mine works. Mine's much more configurable. But yeah, I mean, a gap, you can draw them on manually. I used to draw them on manually, but there's so many gaps. I mean, these little ones here, you're probably not going to pay an awful lot of attention to. But it's the main gaps that we're looking for. Yeah, this is what happens. The market comes up and it fills these gaps. That one there, yeah, fills it. This one here filled. These ones here will get filled at some point probably. But you do get obviously orphaned propulsion gaps that move away. And this is why I use it. And this is why you see me targeting these, because I have no idea where anything is going to go, obviously. So if I'm short, like I am now on the pound yen, I'm looking for somewhere to get out. There's my average. So where's the nearest area of propulsion below my average? There's your target. Yeah. So you could hold it for there. And all these propulsion gaps is an impulse candle. Yeah. And an impulse candle is a large bank order. So when an impulse candle or a large bank order breaks a previous support resistance area, you know that this accumulation or balance, which is equilibrium between the banks, has been broken by one party. If that party is going to continue to push price, it will test the propulsion gap and move away. This propulsion gap indicates the banks and institutions that were short positioned at that level being caught offside. So their incentive is at some point to drive price back to that level to complete what they call unfinished business orders, which is orders which are in drawdown, exactly the same as we are trading. Yeah, I'm in drawdown because I've got the wrong positions on. This is exactly what the banks are doing. They don't use a stop loss. You don't get into a bank trade and go, if it goes to there, I'll take the $35,000 loss. Bank, your manager would be kicking you out the door. You scale into moves, but the advantage you've got in a bank is you know when moves are coming. You've got other banks asking if you can take the other side of the move over the counter. You know the moves are coming. You've got a market maker desk which has control of large sums of money to make moves happen. So when you are offside on an order and price is moving away, you've got an army behind you that, if they want to, can just kick the price back down again. We don't have that luxury. So we need to know where the banks are. This is what these indicate. This is the bank positions. Yeah. This is why you find they get filled. Market is attracted to them like a magnet. As we do here, the banks do not have an individual instrument approach to their portfolio. They trade a portfolio of products, and there is an overall P&L on the portfolio of products. And as I'm doing here every day, if there's something that is offside and your bank has not got enough momentum to get down there, there's not enough commercial orders on the desk to drive it, there's no reason for the speculative traders to do this, you can use other movements, i.e., Bob, are you moving the Swissy today? Yeah, we're going to be moving the Swissy down today because we've got tons of Swiss franc conversions to do. Okay, brilliant. So they move the Swiss franc down. So you know the Swissy's coming. So what you do is you short the crap out of that, use the profit of that to pay for this. We can't do that. So you have to have a way of identifying where the market movement is coming from and going to, which is all this indicator is doing. And it's nothing clever. Yeah, you don't need an indicator to tell you there's been a large bank order. If I took the indicator off the chart now, you can see very clearly there's a large bank order gone in there. Yeah, it dropped over an ADR for 2 hours. Yeah, that's a shit ton of money gone in there to move that market. $7 trillion a day market. There's a big amount of money to move that down there. What does it leave? A load of people who have done what? Taken the opposite side of this trade, because if the bank wants to make this move down, i.e. sell, what do they need? A buyer. Yeah. So there is a bank or an institution on the opposite side of this move right now in drawdown. Because if there wasn't, it couldn't happen. There's always got to be a buyer and a seller. One of them is always going to be wrong, but one of them has the power to move it back. We don't. So we have to sit through the moves, whereas they can sit through them in confidence that they can do something about it. We have no idea whether Bob is going to be moving tomorrow. So I need to get out of the US dollar yen at the moment. I don't know if Bob's going to be moving the Aussie dollar, the Swiss, the New Zealand dollar, the euro, or the pound tomorrow. They do. So they know what to do with these tomorrow to get out of that. That's the luxury I'm missing. There's always a problem with every strategy. That's mine. So I'm using this just to tell me where roughly price is going to go to and give me areas to aim for. And you can also use them for entries. If you go and watch the video on the website about it, it explains the concept. You can use them for entries to get in short because the banks are short. So if the money moves back to this level, these guys are short. They want it down. So what do? Add more volume, which is why it comes back and retests them and bounces away. So the guys that bought here, moved it up to there, they're long. If they haven't exited those longs, they probably still want to be long. So what do? Add more, which drives it back up again. And then either the guys that have driven it back down here, out of this propulsion gap, will go, nah, we want to go short. And these guys will go, nah, we want to go long. And they'll have an argument, balance, we call it, range, equilibrium. Yeah, these buyers and these sellers are fighting over whether we're going up or down. This is called a breakout, price discovery. These guys won. These guys lost. So to make price break out of this level, you need what? A large order, which is where you tend to find a new propulsion gap form. Yeah, propulsion. All it is, it's a battle. Think of it like a war. Barclays, HSBC, trenches. If this trench is going to move forward, they need to push price up. There's a trench there they've got to get through if they want to push past it. This trench is pushing back because it wants to get down there. Battle line, that's all it is. Very, 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 very simple concept. But people don't, this is the key thing, which is what I try to explain in the bootcamp. There's absolutely no point in looking at this chart without understanding why these candlesticks exist. These are just orders placed by banks and institutions to buy or sell a currency against another currency for either a commercial purpose, a speculative purpose, or any other reason. Yeah, that's it. That's what's happening. This is why these candlesticks are there. There was a news event that happened, and they needed a large order executed, so they waited for the news event, and then they dumped it all in the market because they knew there'd be a load of liquidity with people wanting to execute their orders. It's like turning up to a party, right? I want to buy a load of apples or a load of beer for a party, not apples. I want to buy a load of beer. The off license is shut. I can't. So what do? You queue up at the off license waiting for them to open. As soon as they open that door, what happens? We all rush in, we all spend our money, and then we all rush out again. Then the off license is standing there going, I haven't got any customers. That was a news event. We're all waiting for that thing, the door opening in this case, to go and do our thing. The banks are all waiting for a news event so that they can find liquidity to execute the orders. What we see on the chart is that event. They went long there, price pushed back, they added some more. 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 We were making lower highs, which means that there was more selling pressure than buying pressure. These guys lost. Our trench is now moved back from here to here. This is where we're fighting from now, against these guys. It's all that's happening in the market. You just need to understand how it's working. If you understand how it works and the mechanism behind it, you can understand how to ride the battle, which is what we do as position traders. We have no idea who's going to win. We have no idea whether this is going there or it's going to go there. But we do know it's going to there or there. That's a big advantage. Right. Market's opening in 10 minutes, but I'm not going to trade today. I'm not getting on the back of that thing. Look at that. Yes, I wouldn't trade the US indices this afternoon. What have I got running? I've just got the S&P running, the FTSE running, which is good because I'm in the FTSE. So I've just exited the longs on the FTSE. 3-bar reversal. Oh, look. So this is the new feature on the stock index Hedge EA that I've built. Hopefully you can see. So hedged, short there, long there. Exited the longs at 3R. Price has pushed up a little bit. We've got a 3-bar reversal just gone in. So it's triggered the short entry with the trailing pending order, as it always has done. The difference is my new version has put an automatic re-hedge there for the entire lot size that I have short. So this is the auto re-hedge functionality that I've built. And I've been waiting for it to do this so I can test it live. So it's working, which is great. So we've got an auto re-hedge on. We haven't yet. We've got a buy stop there. So what's probably going to happen is it's going to come down and test this propulsion gap, get me out of the trade, and I'm going to be happy. But I'd much rather it pushed up and triggered that so I can test what happens after. But we'll see. So, but apart from that, I'm not going to trade the US this afternoon. This move is too big pre-market. It's exhausted. We've hit ADR pretty much. We're just shy of ADR across the board, look. So we're up to that big brown number, 18,000 again. Look on the NASDAQ. So there's a likelihood that we will just get something like that at the open because it's run out of legs. So I'm just going to turn auto trading off on these three this afternoon. So it won't take any trades. And I'm just going to obviously watch the FTSE, which is the only thing that I'm in. If you want to trade them, it's up to you. It may well break. It might fly. I don't know. But in my experience, after this sort of move, you tend to get very little oomph left in the market. They just don't have enough. Think about the initial cash balance, which is placed at the opening bell, is orders waiting to be executed. They've just done that because the liquidity we had off the news allowed them to execute those orders. So there is no opening range. There's no opening cash balance that will potentially go in. Therefore, you get sideways movement. They will probably start a move after that, but the open will be very whippy. So just be a bit careful this afternoon if you're going to trade it. Afternoon, Max. Feels like Poke the Bear Thursday. Where's AZ? Yeah. Don't poke the bear. Nice, the auto re-hedge for SIH, yeah. It's testing though. The way the SIH works, this is quite complicated to code in because of the way I've built it, because I wasn't anticipating doing this. So I've built it in a way that makes that actually quite a complex thing to do. So I've tested it in the back tester and it all seems to work fine. What I can't do is test every condition that we might come across. So to test this functionality, I have to find a day that will trigger a single rehedge, a double rehedge, a hedge exit to make sure it closes this. I've got to find specific day types so that I can run it on them. So I end up, and I did end up when I put the rehedge functionality onto this, sitting watching the backtester run for about an hour and a half, thinking, when are you going to do what I want you to do? Because I couldn't find a day. So I've just decided to stick it on live testing. I've tested all the main functionality. I'd really like that to rehedge today, but obviously from a selfish point, I'd like it to come down so that I don't rehedge. But the problem I found with this is here. So when you get one of these, a news event, the rehedge, it will get you out of your profit very, very quickly. It will place a pending sell stop order. It will move up really fast. Yeah. And then you tend to get a quick pullback, which rehedges you. Then you get the, which obviously gets your aggressive drawdown control on. Then you get the rehedge placed there. And because it's a large fundamental news event, you quite often will get a pullback and a push. These days, what it tends to do is make lots and lots of profit on the moves up, but makes a big drawdown. But the drawdown is nowhere near as big as the days where you saw the days in the news. If you've tested news days. Some news days it can make a massive loss because it doesn't rehedge. So this is the idea of this. And what it does, you can see, is it automatically places a TP on that rehedge. So this rehedge here has a take profit. And that take profit is 2R. In my case. So the rehedge there, you can set the rehedge TP multiplier, which is basically just a percentage of the opening range. So that level there. That doesn't seem far enough to me. In this particular case, 200. It's oh, sorry, yeah, it's 2R, isn't it? 6. Yeah, that is right. Yeah, so it's 2R. It's not 200% of the range. Sorry, that was me being an idiot. I've only just coded this. I should know that. It's 2R on the range. So that is 163 pips, 163 points. There they go, 163. So basically, we are looking to lock in a second hedge. It's because I put the range wrong. There's my long there. So that's the range there. I was measuring a different range. So that's your range, basically. So it's 2 times that. So what will happen now is it'll either pull down, we get out as normal. No voice. Yeah, there's voice. So we either get out as normal or it pushes up and goes through that level and hits that target and we bank again. And then it will do the rehedge aggressive exit again and try and get out again. But we'll see. Yeah, we'll see what happens with it. I'm testing it live. I need to make sure it works. Like everything, back tests, great, but you need to make sure it actually works on an account while it's trading. So there's the open going in. So nice push down will be good. Let's just see what the indices are doing. So if you're trading the NASDAQ, you're long. S&P might have triggered long. Dow Jones, you've triggered short. If you're taking the pre-market range, that is. There we go. So that's back to break even. We're at 125 ADR with a 3-bar reversal. So I suspect this probably is going to come down and retest this propulsion, which will get me out anyway. So will this be an update? Yeah. No, it'll just be an update that I'll push out. All I've done is I've added, so there's no functionality change at all in SIH in the EA. What I've done is I've added here in the hedge recovery section, you've got 2 new inputs: automatically re-hedge if aggressive exit fails, and re-hedge TP multiplier. So basically this has to be turned on. So you've got to have aggressive hedge exits on, obviously, because if you don't have aggressive hedge exits on, you can't re-hedge because you haven't taken the trade. I haven't tested what would happen if you didn't have those on. I need to test that as well. Yeah, it wouldn't trigger because it needs that turned on. So yeah, all I've done is added those 2 inputs. So there's nothing changed at all with the EA. It's just you've now got the option for that. And when I push it out, obviously that will be set to false so that it won't do this by default. You will need to turn that functionality on and set the TP. So all the concept is we get out of our long, we get our aggressive short on. So we're looking for price to come down a little bit to exit our position. If that doesn't happen, we re-hedge at this level with the entire short position. So we've got 2 shorts on there. We've got 2 shorts on there. So we go the total lot size of our shorts long, which locks in 100% hedge, which means it locks in our P&L at a figure that never changes. And then we hope that it pushes up another 2R in our direction. We get out of that trade, bank more profit. Our loss recovery target goes up. And then we try and get a 3rd aggressive entry on. So we would have short there, a short there, and then we would have another short there. If that short drops, happy days. If that short fails, we re-hedge with the same full lot size of everything short, and we go for another 2R. So what will happen is you'll lock in a 1R loss, a 2R loss, a 3R loss. If it pushes and doesn't work 3 times in a row. But what it won't do is what the problem with the SIH is, and again, everything's always got a problem, isn't it? If it pushes up, hits your target, you get the aggressive drawdown control position on at the moment, and then it goes 5R against you, that hurts. You have to manually re-hedge. So all this is a kind of do it for you re-hedge, which is what you should be doing this manually anyway. But it's tempting to let it go. And I have let it go. And the thing is, with this, you can adjust it as well. Look. Just want to see what happens on candle close, 55 seconds, whether or not it puts that back. That's something I haven't tested live because this is the first time it's actually done it. So yeah, if for example, that it had put the re-hedge in there and I see a really obvious resistance coming up and I think, well, I've re-hedged, but I'll give it the benefit of the doubt we pushed that and bounce at that level, I would want to move that up and take a bigger loss or lock in a bigger hedge. And then it dropped back down again. You're losing audio, are you? You went into slow mode, lost audio for a few. It's not me. No dropped frames. It's not this end. Must be YouTube end. I don't know. Euro US dollar. Not doing anything, is it? Sideways. Nothing happening on the Euro US dollar at all. It's just stuck. There you go. Beautiful example of a propulsion gap retest. News. unfinished business finished. Thank you very much. Yeah, just done. Same here. Look, news, unfinished business finished. Off we go. It's not going anywhere, Euro US. So up or down from there. Do you also have stocks or an ETF or only trading? Do I also have stocks? No, I don't trade stocks at all. Everybody else's audio is fine, is it? And stuff, yeah. It's probably your end, Brian. Got you. Dougal, hello. I got to the bottom of that thing you were talking about yesterday. Before I go, I was going. I don't seem to have gone. So you were saying about how I've got 10,000 sales on the MQL5 marketplace. Yeah. So I looked into this because I've never even looked at my profile. Well, not enough to see that little thing, and I saw it. So it says 10,000 sales. Yeah. So I went into my admin area where I can see all my sales, and it gives you totals, right? But what that total is called in MQL5 in the admin area that I see, it's called operations, right? And an operation is somebody either purchasing a product from you, you purchasing a product, you subscribing to a signal, someone else subscribing to a signal, or you giving away a free indicator, i.e. placing a product on the marketplace that is free and someone downloads. Yeah. So remember I said to you yesterday, I reckon that's probably demo in stores. It's not demo in stores. It's operations. Yeah. In 2020 to 2021, I had 2 free indicators on the marketplace. Yeah. And they were basic. There was a stochastics one before I made the multi-time frame stochastics indicator. And there's another one. So those 10,000 operations, the vast majority of that is made up of, and bear in mind, I've been on the marketplace since 2020. So this is 4 years, 10,000 operations. Does it sound like I've had 10,000 operations? 10,000 transactions or whatever you want to call them. Most of those are a free download of an indicator. So, because that shocked me yesterday when you said that, I was like, if only, because we worked it out, that would be $500,000 in revenue at $49 a pop. Not that I get that, because MQL5 take 20% of it. 25%, sorry. No, 20%. So that's what it is. It's operations. So basically, if you were to set up yourself on MQL5 Marketplace as a vendor and chuck a load of free indicators out there, and this is probably what a lot of these guys do. They chuck a load of free indicators out there to make it look like they're amazing and they've got loads of sales. And then you look like you're an amazing seller, and then they sell products, but it's all being done by somebody downloading something for free. There you go. I went off on a mission to get to the bottom of that after you said that yesterday, because I was either going to email MQL5 and say, "Oi, where's my money if you've sold 10,000 of my stuff? Because you haven't told me about it," or figure out what the hell it was. And that's what it was. So there you go. Almost screen captured that. What that? There you go. There's your screen capture. Oh, that's clever, isn't it? Ooh. So I was bucking about in my Streamlabs, moving things around earlier and putting the Discord link in. Right, so I'll leave it there today. Anything you need, let me know. I will be in Telegram and in Discord. Everything's moved nicely today. So nice amount banked today. Hopefully this yen move continues. So just got to hope really that the Japanese decide that they want to keep on barking about everything moving in the right direction. So inflation going up, interest rates going up, etc., etc. So hopefully we get continuation on the yen moves. Everything else is just sort of ambling about at the moment. We're just waiting for other things and other news. So, but I need to quickly record a video. I've got to go out at 4:30, so I want to quickly record a video, which is going to be a monthly recap, same as I did last month on YouTube. So I'm trying to make it a regular thing where I post, it's gone, a monthly results video, if you like, just so that we can kind of, well, I can keep track of what's going on with all the main position trading strategies. So 40% January, and this month we are up 9, 15, which is 25, 35, 45, 55, 60%. We did 40% in January and 60% this month. Even better. Obviously, drawdown is high as well, but who cares about drawdown? Anyway, so I'll be back. Another 20% to the tax man. 40%. I'd love it to be 20%. You're not earning enough. When you get to the higher bracket, it's 40. So yes. Yeah. Mind you, that depends. Depends what I earn. So anyway, I won't get into tax and stuff now because it's different in every country. But anyway, yeah. So yes. Mr. Taxman, if you're watching, congratulations. You've just earned whatever. So I'll be back tomorrow. No, I won't be back tomorrow same time. So tomorrow's live room in the afternoon. We've got an afternoon only tomorrow. Yeah, 2:45. So there's no live room tomorrow morning. Tomorrow afternoon, we're doing a 2:45 because it's the US dollar manufacturing PMI figures. So going to be on for those tomorrow afternoon, which is starting at 3 o'clock. I'm not going to do one tomorrow morning. I'm trying to cut these down a little bit and stick around the news just so that I can get stuff done because I'm just not getting anything done. So tomorrow, 2:45, it's already on the schedule. So on the lives, if you just go there, you'll see it's already scheduled. And I will be back tomorrow. All right. So have a good day. Anything you need in Telegram or Discord. Other than that, I will see you guys tomorrow. Have a good day.